Hello everyone, my name is CMA Pathimini. Welcome back to CMA modules. In this video lecture, we will be recording illustration 19 related to joint venture. Here, this sum is using separate books of accounts method. Sagar and Paki entered into a joint venture and undertook building constructions of PN Company Limited, Mumbai for rupees 5 lakhs. The following information are available for undertaking business. Sagar supplied materials for rupees 35,000 and Paki paid rupees 20,000 his architect fees. Sagar contributed rupees 1,25,000 and Paki contributed rupees 75,000 and deposited the same amount in the joint bank account. They paid from joint bank account for material rupees 2,80,000 and wages rupees 1,20,000. On completion of the venture, they received contract price as per the terms. Paki took over the unused materials for 15,000. Profit and loss on joint venture will be shared by Sagar and Paki equally. So here we have joint bank account, joint venture account and co-venturer account. We are supposed to prepare joint bank account, joint venture account and co-venturer account. So let us go for joint venture account first. First transaction first. Sagar and Paki entered into a joint venture and undertook a building construction of PN Company Limited, Mumbai for rupees 5 lakhs. So they are undertaking a joint venture account. Okay, construction of a building and they are paying, the value is 5 lakh rupees. Okay, so 5 lakh rupees. Then we have next. The following information are available for undertaking business. Sagar supplied material of rupees 35,000 and Paki paid rupees 20,000 as architect fees. So we have Sagar who has supplied material. So joint venture to Sagar, a joint venture to material and joint venture to Paki. So joint venture to material and joint venture to architect fees. Okay. So here we have 35,000 and here we have 20,000. And under co-venturer, I will write by joint venture, it will be 35,000 here and 20,000 here. Then we have Sagar contributed rupees 1,25,000 and Paki contributed 75,000 and deposited the same amount in the joint bank account. So we have Sagar contributed rupees 1,25,000 and Paki contributed 75,000. So Sagar is contributing. So I'm getting joint bank. Okay, I'm getting joint bank to Sagar and here I'm getting joint bank to Paki. Okay, so under Sagar, here I'll write by joint bank. By joint bank, it will be how much amount they are contributing. They are contributing 1,25,000 and 75,000. They are contributing 1,25,000 and 75,000. So I'll take 1,25,000 and 75,000. And here under joint bank, it will be to co-venturer. It will be 1,25,000 and 75,000. Okay, 1,25,000 and 75,000. So 1,25,000 and 75 is done. Then next one we have they paid from joint bank account for material 2,80,000 and wages 1,20,000. So they are paying from joint bank account for material 2,80,000 and wages. So joint bank, joint venture to joint bank, joint venture to joint bank. So here you'll have joint bank account to joint bank account. To joint bank account, we have material and we have wages. So material is 2,80,000 and this is 1,20,000. and under joint bank account it is joint venture. By joint venture it will be 2,80,000 and it will be 1,20,000. So we have joint bank account. He's purchasing, they paid from joint bank account for material 2,80,000 and wages. So we'll have joint bank account, joint venture to joint bank, and under joint bank, okay, under joint bank, it will be by joint venture, 1,20,000 here, so 4 lakh, correct. Then we have next entry. On completion of venture, they received contract price as per the terms. Paki took over unused material. So material is going. So to joint venture, who is taking away? Paki is taking away. So Paki to joint venture. So here it will be to joint venture. Okay, to joint venture. Who is taking away? Paki is taking away. Value is 15,000. Okay, and here it will be by Paki. It will be 15,000. So this part is done. Profit or loss on joint venture will be shared by Sagar and Paki equally. So whatever is the profit or loss, it will be shared by Sagar and Paki equally. Okay. So we have joint venture account, we have co-venturer account, we have joint bank account. Now here how we'll go for. So let me total it up. So I'll have 5,15,000, 5,15,000, 2,80,000, 20,000, 35,000. So I have profit on joint venture, and it is Sagar and Paki 30-30. Okay, 30-30. Equally they are sharing, right? 30-30. So this part is done. Then we have co-venturer account. So joint venture account, joint bank account. We have this profit also coming here. So joint venture is 30,000 and here we have 30,000. We have 1,90,000, we have 1,25,000, we have 1,25,000 minus 15,000. So 1,10,000. Here we have 1,90,000. So we have two joint bank account. Okay. Now this joint bank will come here by co-venturer account. By co-venturer account, it will be 1,90,000, 1,10,000. So I'll have 2,30,000 and 4,70,000 as my total. Okay, so 4,70,000 and 2,30,000. If I subtract this, 4,70,000 minus 1,25,000 and 2,30,000 minus 75,000. So I'll sorry, I'll have joint venture account as 3 lakh 45 and 1 lakh 50, that is 5 lakh between Sagar and Paki. So this is my basic. I hope you are comfortable with this sum. So what we did, we went for posting. We completed posting between joint venture, co-venture and joint bank account. First, we totaled up our joint venture account. Whatever was the profit, that profit we transferred to co-venturer account. From co-venturer, what we did, we transferred it to joint venture account. Uh, the balance part 1 lakh 90 and 1 lakh 10,000, and after that we got our balancing figure, that is 5 lakh rupees is the total amount which we have in our bank account. I hope you are comfortable with this lecture. Thank you.